Been a terrible week to be sick as a dog, almost died like a dog, but we're on the mend now. I came back, I opened my screen today to see HIMS getting absolutely decimated. We're going to talk about what's been going on. Is HIMS going to be a $5 or $100 stock? It's shaping up to be the venture capital bet of the decade. So we'll briefly talk about what's going on, and then I'm going to get to my bull case and whether it is still intact. There will be lots of Lord of the Rings references. You have been warned. So let's get right into it. So here we have it. HIMS is down quite a bit, 16%. It was down a lot more than that at one point, down 30% in the last 5 days here. The stock has crashed. Market cap has gone all the way down to $4.1 billion. On the back of this lawsuit, Novo Nordisk officially sued HIMS and Hers this morning for patent infringement. So HIMS was forced to cancel their new $49 oral GLP-1 pill that they had announced. They canceled that over the weekend after the FDA and DOJ threatened a crackdown. So this whole situation at HIMS and Hers, the situation they find themselves in, it's unfortunate. And I think it's really overshadowed all of the great acquisitions and great things this company has been doing. If we can ever get out from under the shadow of GLP-1s, I think that much potential still remains. So I've always said this company is a venture capital type play. Soon it is either going to be a $5 stock or a $100 stock, and I'm sized accordingly. So first I'm going to break down what's happening, and then we'll look at what's left of the bull case here. So today's headline, you got market fear based on Novo Nordisk suing HIMS, and investors are worried that this $227 billion giant is going to litigate HIMS into bankruptcy. They can definitely get bogged down in litigation, but I think Novo's lawsuits really show that HIMS was taking enough market share to be considered a substantial threat to them. So for years, HIMS and Hers has kind of thrived on this compounding loophole. It's been this regulatory gray area that allowed them to essentially print money while while the traditional GLP-1s were considered to be in this shortage, and that's been a lot of this stock rise. That shortage is now over, and the FDA is closing the door. So the risk is that we're going to see a sudden, violent end to a revenue stream that is projected to bring in $725 million of revenue for 2025 for the company here. So in the worst case scenario, it's not just a slowdown, it's a terrifying vanishing act for 30% of their business. So the sooner HIMS and Hers can put this GLP-1 debacle behind them, the better. It was a temporary boost to revenue. It's never been something I considered central to the long-term potential of the company. And the good news is, while $725 million is quite a big number, it is only 30% of the company's 2025 projected revenue, which sits around $2.3 billion. So if they're forced to cease the whole segment, it's not central to the company's survival. The company's other segments are growing faster. They have better margins. And they've made major acquisitions for more innovative products that have not hit the market yet. But these are going to be key to their 2026 longevity roadmap. So the company's already showcased its operational agility while management paused the compounded weight loss pill over the weekend. It was only a few weeks ago that they moved to acquire Your BioHealth by integrating their pain-free microneedle blood sampling tech into the new HIMS and Hers Labs platform. They're proving the innovation flywheel is still turning. So they aren't just selling pills anymore. They're building a full stack diagnostic and longevity engine. Last note on the GLP-1s, and then we will get to the bull case. So GLP-1s have transformed, I think, from a growth catalyst into a major narrative detractor. And while GLP-1s remain one of the hottest markets in history right now, it's rapidly entering a brutal race to the bottom on margins. You're going to start to see these big pharma giants like Novo and Lilly continuously undercut each other. They've been doing that in order to protect their monopolies. And the GLP-1 space could become a low margin commodity game. But for him, the real prize isn't winning a price war on a single drug. It's the 2.5 million subscribers that are growing rapidly that they've already captured while the rest of the world was distracted by this GLP-1 hype. So let's get to the bull case. I think we have a multiple vertical compounding engine on our hands here. If we zoom out for a second and we just talk about healthcare in the US alone, it is a $5.3 trillion industry. And while traditional pharma grows at a steady 4 to 6% annually, it's a growing industry. HIMS operates in that, but they're a tech growth company operating in an industry that faces ever increasing costs and worsening outcomes simultaneously. It's incredible. So the HIMS bull case is pretty simple. I think that they're proving they can do three things. Number one, get people better treatment. Number two, get people faster treatment. And number three, get people cheaper treatment. When we boil it down to the simple here, and then I'll get into how they're doing that. So this is achieved by cutting out the bureaucratic nightmare of health insurance. HIMS is going direct to consumer. They're disrupting a legacy industry. And in recent years, we've seen this work in other legacy industries. Netflix fought the cable grift. Tesla fought the dealership grift. HIMS is fighting the insurance and big pharma grift. Now, Netflix successfully disrupted the linear cable and studios model. They fought the grift and won the cable grift. Tesla disrupted the automotive industry as well as the dealership model by going direct to consumer. On the dealership issue specifically, Tesla had to fight for years and years against lawsuits and all kinds of bureaucracy for the right to sell direct to consumer. Tesla fought the dealership grift and won. The legacy system hit them with everything it could in a desperate attempt to hold on to an archaic system that benefited all parties but the consumer. That's similar, I think, to what we're seeing happen with HIMS right now. So I think today's price action, if I go back here, is the 2019 Tesla moment where everyone thought that Elon was going to go bankrupt with Tesla. HIMS is attempting to make things better for the consumer, and they have every three-letter alphabet soup agency, as well as big pharma players like Novo Nordisk, bearing down on them. Now, of course, these entities have a vested interest in seeing HIMS and hers fail, so that the healthcare grift can continue. The one where the people are paying higher costs than ever, like I've mentioned, only to find they're the most sick they've ever been. Things are going swimmingly. So let's get to the HIMS specifics here. They have a multi-vertical moat that's becoming increasingly evident when we zoom out, and you see that revenue is increasing and profits are following, right? It's just going up and to the right here. It's an up and to the right business. Now, while the loss of GLP-1 revenue would be painful in the short term, the company is built to weather the storm, and much of that fear is already priced in. HIMS has, as I've mentioned, 2.5 million subscribers. That's across hair, sexual health, mental health, none of which rely on GLP compounding. They're treating a growing number of customer pains, and increasingly, through personalized treatments, they can treat multiple conditions with a single product. With 74% gross margins right now and a forward price of sales that is now under 2, HIMS is now priced cheaper than most legacy healthcare stocks. The sooner the market begins to focus on this core engine, I think the better it will be for the company. So again, HIMS is now a $4 billion company. They have 2.5 million subscribers. If we were to compare that to United Healthcare, an insurer, they have 51 million, I'm just going to say, subscribers. HIMS and hers possesses a vast array of innovative products that you can kind of see some of them here that are all not GLP-1 related. And I know it's not an apples to apples comparison with HIMS and UNH, but I think as we start to cut out the middleman, it can kind of give an idea of where things can go. Again, HIMS, just 2.5 million subs. United Healthcare, 51 million people pay for their health insurance and their healthcare, essentially through United Healthcare. So there's a lot going on here. The three things I mentioned, those other core areas, not to mention the lab testing and diagnostics coming soon, the at-home pain-free blood draw, possibly even peptides and more personalized treatments, thanks to all of the, I think, excellent acquisitions the company has made. Now, can HIMS continue to get people to cut out the middleman that is health insurance and go direct to consumer to purchase these products that are better, faster, and cheaper? That's what they're going to have to continue to prove. Now, I thought this was interesting. If you try searching HIMS and hers, you're sure to be met with paid ads from the likes of Eli Lilly and Novo Nordisk. I can think of few situations where a $1 trillion company seems to feel threatened by a $4 billion company. I think it's quite telling. So let's get to the final verdict, a chance to show his quality. The market is currently pricing HIMS as if it was a one-trick pony whose only trick just got banned. They're ignoring the 2.5 million people who already trust this platform for their daily health. So is it a $5 stock or is it a $100 stock? The legal battle with Novo Nordisk will dictate price in the short term. But for those who remember the Tesla is going bankrupt headlines of 2019, today's 30% crash looks less like an exit and more like the ultimate entry for those who can see through the smoke. Hims and Hers is in early innings. They are the kingdom of Rohan at the Battle of Helm's Deep right now. The wall has been breached. Morale is at an all-time low. But Gandalf and the Erlingas, which are Hims Labs, longevity, and diagnostics, are on the horizon. If they can manage to win here and hold off, they will face the Battle of Middle-earth. So this is going to go on. This will take years to fully play out, as it has before in other industries. Shareholders in companies like Tesla that managed to hold on were rewarded 100x. It all falls to HIMS management now. Are they still up to the task? A chance for Andrew Dudum, CEO of HIMS, to show his quality. Let me know your thoughts down below. Don't forget to like and subscribe. I'll see you guys on the next one.